Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino, who should hopefully be here this afternoon. Hey ho, walk off. Not understanding that comment pigs a slaughterhouse, but maybe you'll elaborate. Good morning, Patrick. Good morning, oink oink, Gary. George, 2% up Tuesday. You ready for a rally tomorrow on Fed dovish future guidance? Well, we have the signals in place. That's not going to be a big market mover for me. The S&P Brazilian S&P Global Manufacturing. Now, our ISM Manufacturing PMI could be interesting. Forecast right at neutral. We had Redbook come out earlier. Hey, Connor. What do you mean WTF is going on, William? Why are we going up like this? Oh, it was November 1st. We're going up for November 1st. The short-term trend is up. Good morning, Legion. Good morning, Sterling. All right, so we got after the open, 15 minutes. Remember, S&P Global Manufacturing PMI final expected in contraction prior 52, this 49.9. The minor cousin to ISM, which is coming out right at neutral, right at the 50 points. So do not ignore that, especially at 9 a.m. Central, so 30 minutes after the opening. Do not ignore the prices. If you're looking at this to see if something's good or bad, watch the prices. Also, then minor, but something I will look for is Fed Services Index for Dallas, seeing if it's still in contraction and if it drops from the previous. So that's about it there. Stock market map pretty much green besides Eli Lilly and Company. Pfizer beaten earnings. Pfizer beaten. What else? We had SoFi gap up on a beat, but still EPS is negative. Pretty much green across the board for everything. Fed watch close to 90% for that 75 baked in for tomorrow, but everything's going to rely on the press conference. We're still slightly in negative gamma mode. But the gamma is switching so rapidly with short-term options, it's literally insane at this point. So we're slightly in negative, but that can shift to neutral on any minor rally. We'll go back to neutral, and then it could change again tomorrow based off your short-term options. Fear and greed still in greed. Let me by the way, before we get to this, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. All right. Now, again, SoFi was a gap up with a beat. I looked at Uber, but I did not see it when I looked at it. Pfizer was definitely a gap up, and then BP was sort of mixed. So, today after the close, do not ignore AMD. I know we got some chip players in here. AMD, just remember that is on the radar screen. But everything will be leading up to tomorrow. All right, so what do we have? What do we have here? Well, we are still in our short to, I guess you could call it somewhat medium term. I mean, I could see rallies even on a pullback tomorrow. We could, unless it breaks some really key levels. This is still in rally mode. We've hit the stop reduction area twice now. We do have a potential double top, which is the only thing that shifts me short-term bearish. Everything else would be just micro time frames. Micro time frames, and what I mean by that is 5 and 15-minute time frames based off market internals. But right now, until we get at least you can see it here on the 1 hour. Is it valid on the 1 hour? Yes. Into a clear path move. Breaking down also, this is so interesting just because of where this key level is, because that would take us back below this resistance, becoming support verified yesterday, back to resistance with a breakdown pattern into a clear path move. That would need, you could play it aggressively on a 15-minute close. Preferably it'd be a 1 hour close and then a retest of that near area. 38.72.25 targets 38.46, 38.33.25, 38.20.25. Now, just because we have that on, I have to keep clarifying this, especially for newer people, does not mean you just start selling here. Why? That's a potential pattern. It would also take it, interesting enough, below the 4-hour rotation zone. Where does that pattern sit with the daily? It takes us into the daily. It does not even take us to the major prior breakout at 38.01. Separate from that, on the continued rally, remember we still have the larger pattern in place, which has triggered back on the 24th of October, which again has hit the first stop area. I'm using the minor harmonics in this. I'm also going to put on the little reverse harmonics to see what this gives me. Actually, I'm going to put on this forwards. I should have said forward harmonics. It's not. I'm not doing this micro harmonics, but then that gives me 39.45 to 39.47 cluster. So that is on continuing bullish mode, and that is my at least a minor target for today. Then 39.66. Then we have 39.85.75 to 39.96. Remember, this is sitting right against the 62.5. The 62.5 is sitting right here. So that's the key level I will be watching on today's closing basis. Why we close above it, probability-wise, favors a return. Where would that return be? Well, right between the probability areas is the 200. So that's what I'll be watching. Could you get a pullback well before then with Fed tomorrow? Yes. Could we trigger a double top and not close above that level today? Yes. But for right now, the shortish medium-term trend stays to the bullish side. Hope that clarifies it. Let's see. Let me see here. Christoph, hello. Good morning, Anissa. Waka, you're just so bearish. You could have different time frames. Do I think this market will roll over again? Yes. Do I have to go with the probabilities in the short term? Yes. If the probabilities change, we change as traders because this is tactile trading. This is not just where you put positions on and go to sleep. It will be nice again when we can put positions on and go to sleep. It's not now. All right. Did I say good morning, options 22? Let's, where do we sit? Coco says big rally ahead. Oh, way to jinx it, Coco. Hey, Mike, for a triggered double top bottom, what does it take for it to become invalid before hitting the first target? It requires the stop level to be hit. Next time we have one triggered, I will put it on there. I will show you. I've said that before, so stay tuned. But that's the only thing that once it's been officially triggered, whether it's all right. If it's confirmed, let me start with this first. If it's confirmed, which it can be confirmed without being triggered, remember that. If a pattern's confirmed, not triggered, and then hit what would be the triggered stop level, it's invalidated. If it's triggered, does not get to the stop reduction target, and hits the initial stop value, it's invalidated. So that's how you can run that. So this one, this little double on the S&P is not confirmed or triggered. So this could be invalidated just on a continued rally. That could be invalidated on a continued rally without ever being confirmed or triggered. Nas, let's get through this quickly. Let's get to the markets again. Double, potential double top, potential would need to be confirmed below 11,326.25 and triggered on at least a 1 hour closing basis below that, 11,238, 11,173. Interesting enough, and I'm using the conservative targets because I'm using the aggressive targets technically but we might pop above this. That's why I think it will become the conservative targets. Interesting enough, that takes us back to a 50% harmonic for the full target into a clear path. Pretty much the same thing. Let's get to the spiders and the Qs for those traders. So where do we sit? Pretty much the same levels as yesterday. We're going to be filling the gap with a gap. A gap is a gap fill. Remember that. 390.79, 392.07 to 392.51. To the downside now, 389.50 is the first key level of support. And then before the full gap fill, I'd be focusing on this 387.50 if it rolls over. All right, so that would be before the full gap fill, and technically the full gap fill would be back down to 386.29. So that's where we sit with this, and this potential double from yesterday will be off the table with this gap up. So there is no shifting. That's why the futures provide better patterns. So if we break down and were to trigger that double in the futures, then I'd be watching for the pullback in the spiders, and one of my key areas would be 381.79 at least in the shorter term. Again, to the upside, we got those levels, and the next major level, above this, remember for the 62.5, the 62.5 is roughly 387.84, which we've, I need to clean up this, but you can see with, here's that 62.5. Here is the close from Friday, so this should still also favor higher prices. So that's what you are watching for. So is it guaranteed? No, there are no guarantees, but there's substantially good probabilities that we will see higher prices. Does it have to be straight line? No. Can we get the Fed meeting in the way tomorrow? Yes. Unless it triggers a major reversal, we could have a pullback and then a continued rally higher. Do not mix up time frames. I have to keep saying this because that's an error so many people make. 281.30, 281.50 is your key support area going in with the Qs. And we're against, there's a lot of 282 resistance in the short term right here. You see this resistance ledge right here on the 4 hour back from the beginning of October. If it breaks through that, we could see a pretty quick run up to about 284. This is also a really good area to use your reverse harmonics. And these levels I don't just put up aren't just for today. Now, we are going to gap up. The key support is coming in about this 281.25, 280, watch around there, 281.50, 281.25. You break below there, I'm still going with my next major support level at 279.40. Little longer term on a break above the highs from the 25th area 286.16, then cluster area 287.72 to 288.38, and then longer term 292.17 with the declining 200. So those are your bullish targets, especially on a more sustained continued rally. Really focus on that if you're trying to position things for longer term. Like a double burger on the SPY. Did I miss something? A double. I could go for a double. Not for breakfast. I haven't had. I could go for a double. There's no double top on here. There is not anything. There's not a key reversal pattern. The only thing you're going to watch for bearish mode on the spiders is watch the S&P futures. And key support also on the spiders is coming back. I mean, you can't even get into really, and you could get into micro bearish mode, but you can't get into more than micro bearish mode until at least drops below 385. All right, let me jump to some other stuff. Dow, yes, we have a potential double top in the Dow also. And the Dow's been leading, so if this were going to trigger, it would be a little worrisome. Not from a huge standpoint, but this would be an early warning sign and really confirming that we have at least a short-term top in place, and that would be on the close below 32,617. The trade below there would confirm it. And you can see how extended it is because this little micro double, why I say it's just a short-term pattern, would only take it back to the daily rotation zone. Also remember, based off of this, we should still see higher prices. This is above the 200 now, so the 200 becomes key support in the Dow also. We should still see 33,545. It has we've paused right with yesterday at the 75% harmonic, and now the next major harmonic's 33,545. Russell, there is no potential double. Is no potential double. Next key area on a rally, 1884, essentially 1883.80. Key support. Coming back in at your 1860 with the rising 4-hour rotation zone. This takes a lot to get it into bearish mode even. So remember, to really tip these things in bearish mode, there's a lot of key support that has to be blown through at this point. So pullbacks have to not only, pullbacks are natural, but now pullbacks have to chew through a lot of these resistance becoming support areas. There's a lot to chew through before we can get overly bearish from my perspective. DAX hit the targets on the doubles. Even the lower probability went into the wicks, hit the next harmonic cluster area. So for those playing for continued higher moves, this isn't to an advanced clear path. The breakdown zone is right here. Would be using this again to raise stops for bullish DAX players since it did hit the final target on that double. Your next cluster area is the breakdown zone with a clear path move, which is trading into that clear path move now. 13,590 to 13,615, and right overhead is the simple 200. Also, remember, it closed above the 62.5 back on the 26th. We've hit the 75. We should still make a run towards that 87.5. Notes. Little nice rally on the notes. This is going to be very interesting going into tomorrow. Not necessarily for today from my perspective, but this has qualified potentially with the conservative targets for a double top. Why? The first and second targets are within the move that started on this 4-hour zone. So that could take us back. Tomorrow, cycles at the top on the 4-hour. This could potentially take us back to the lows in the notes and higher yields. And you see also it is a valid on a daily because the second target still comes in the move that started it. So that's what I'm keeping my eyes on after the daily cycles have hit the top and starting to roll over with some waning momentum. Dollar index, dollar getting sort of beat up today. Key support in the dollar is coming back at about 110.04, 110. Resistance, you see the first little reaction to a closely separated rotation zone. So it's very minor, but you got that 37.5 harmonic there. The dollar's an indecisive. I'm pretty much staying clear of the dollar today. We'll peek in at the yen. The yen, you see the pretty decent reversal. Bank of Japan celebrating the little pullback, not able to get above the 62.5 yet, but coming back, you get some major support back at 146.54. There's not a great pattern on the yen right now. Euro, pound, catching on the rotation zone in the 37.5 harmonic. So this, we still have to go with the triggered double. But key resistance of 99.50. A break above that, the target area would be a return to parity. Still, pound, sideways correction, basing at the prior breakout area, still 114.60. Key support with the rising rotation zone, still holding in with the support. The rally area is about 116.40. And then the break above that, 117.80. Now we will peek at the VIX, and I'll get back to peek at any comments before the open. VIX, remember, still after triggering the double. Yes, does this qualify as a short-term double with this gap? Yes, it does. That would be a reversal double. So that's the only thing. Remember, we also have the double top potential in the S&P, Dow, NASDAQ. Well, that if we triggered those, we'd most likely also be triggering the VIX. Whichever one triggers first, we'd have to wait and see. But that would require, and it's valid on the 1 hour, super aggressive would be the 15-minute close above 27.07. Conservative would be the 1 hour close above 27.07. That's the only reversal pattern there is in the VIX. Otherwise, on a rally today, the stop reduction target and key first target 25.31 area. So, hey, Ramsey Fall. Hey, Andrea. That's where we sit. I'm trying to get through the market stuff. I'm not skipping comments. I just have to. Oh, boy. No, I'm not going to some of your comments, P-Dub. Can we keep it a little cleaner on here? Yes. ARK triggered the double bottom back on Friday. $40.50 is the first target, $41.59, second target, $42.67. And that takes it to the other side of the weekly rotation zone. So is it a long-term bottoming pattern? No. Is it a short-term potential bottoming pattern? Yes. A lot of gaps that need to be filled to the downside. Double could be confirmed quick. It could. That's why but I can't get overly bearish until we get something to trigger. because the short-term trend is up. Now let me just see. Key area off the open area is about 39.17 area going into the open, breakout above 39.26 for the very micro. Just looking at some key other levels going in the open. About 39.07 on any pullback with this rising 1 hour rotation zone is what I'll be watching if we do get any pullback into the open. And that's even the first level before I could at all get bearish. At all, even on a micro time frame. So that's where we sit. Let me just check on it, the tick, and then I have to run. Ah, pretty. Now this is a decent tick open for the bullish case. Where are we setting our key levels? We're setting our key levels back first at 0. That's your first level. So any pullbacks are natural after this, but your key pullbacks, if you want an aggressive alert, but just 400 is where I'd set it, just to say, hey, we're pulling back, but there's still very strong buying pressure. 0 would be my warning sign. The buying pressure is waning. Minus 400 would be a short-term shift, but not a negative shift. So we got a pretty much broad-based buying pressure, but not a reaction yet in the futures. So 39.07 is where I will be focusing on for the next few minutes. And then if we did start really breaking down, minor would be about 38.90, and then below there I would be targeting this potential double bottom area to trigger it. Other than that, cannot get super aggressive. Just watch this 1 hour rotation zone going in for the next little bit. I mean, and I'm not talking if you're a 1 minute micro scalper, then you're trading on your own. With that, let me just check the tick one more time. Not even a bearish tick yet. This is just a standard pullback with some selling of the futures. Not overly bearish at all. Look, I mean, we've just returned to 1,000. You want to put this in perspective, how big the buys were off the open? Here you go. Here you go. Here's a bigger perspective. Last time we saw stuff up around here was Monday the 17th and Tuesday the 18th. And Thursday the 13th. So this is a pretty strong tick opening. With that, see, you get the flush. They're trying to, it's going to try to suck people in, all the bearish people. All right. I am going to call it a live stream over for now. Thank you for being here, everyone. Oh, Tesla. I forgot Tesla. Tesla, remember, a close up here would trigger the double. But the next targets, if you're doing stuff intraday, there's a couple gaps in here. The gap 238.13. And then the next key target area is 240, 265, then 249.07. Those are your targets. Your key support coming in back at 229 area. All right. Talk to everyone later. But well, SoFi, I already said it was a gap up. Against your key resistance. It's got intraday plays would be about 645 area. I'm more so watching for a pullback in SoFi. Your earnings, they did beat on revenue, EPS, but you see, this is not a long-term play for me. It's still a crap stock. All right, you're welcome, Anissa. You're welcome, Connor. Chat with everyone later. Bye for now.